Oh my god, this trading thing is really getting to me. I don't know what to do. I've been struggling with it for the longest time. I mean, I've tried everything, every single thing that you can think of. I've tried, and I'm still not profitable. Oh my god, I really wish somebody would help me. I really wish Father God would just send me a sign. Don't want to give up on this trading thing. My family needs me so much. Oh my god, Father God, will you please help me? Just send somebody that can help me. Send me a sign, anything, Father God. Just send somebody that can help me. Please, I need help. I want to be profitable. I want to drive Lambos too. I want to drive Ferraris. Oh my god, I want those BMWs. I want a better life for myself and my family. Father God, I need your help. Just send someone to help me because I know I can't do it alone. Who the dreycosting? Yeah man, I'm me dreycosting here in the flesh, right? Andre, I'm happy to help you straight up because a lot of persons want to give up in this whole trading thing, right? But truth be told, one of the reasons why they end up failing is because they don't have a trading plan. And I'm going to show you, Andre, how to get your trading plan down. So firstly, you have to have trading around your lifestyle, right? Don't try to put your lifestyle around trading. Put trading around your lifestyle. What do I mean by this? You first have to ascertain what time of the day do you have to trade, right? Is it Asian session, London session? Is it New York session, right? I rather trading in London session than New York session. But that doesn't say that you can't trade in Asian session, depending on your 9 to 5, depending on your family time or something like that, right? So you must first establish when are you available, right? Say for argument's sake now, for me now, I can trade London session and New York session, right? So that's first. Secondly, we want to identify what pair are you going to trade. So we now have the session that we're going to trade, right? So I like London session, New York session. So I now need to find pair, all right? No more than 2 pairs, 1 to 2 pairs, right? Around that session. So for me, we're looking at pound pairs. So you have GBP, JPY, pound USD. You have Euro USD moving in that time, those type of stuff, right? But for instance, what if you had like the Asian session, right? Then you can look at all the USD, NZD, USD, Euro odd, right? GBP odd, those type of pairs that move in the Asian session, right? So you're looking at currencies that moving in the Asian session. So the currencies moving in the Asian session are like yen, New Zealand, and Australia. And for the London, you have currencies moving in the London session, such as pound and the euro. Follow me? Then now you have the New York session, you're looking at your USD, you're looking at your CAD. Alright? Moving in the New York session. You also have gold, you also have the indices and so on, such as US30, NAS 100. Alright? Yeah. So you have to establish the pair. But choosing a pair now, Andre, you have to take that in stages, right? Good. As a beginner, right? You don't want to rush the process and just move right into a strongly volatile pair, right? Such as GBP, JPY, right? So, or a US30. As a beginner, Andre, you must start from beginner pair. I would suggest person in the first year of trading should be focusing on a pair like RUSD or USD CAD. Right? Okay. Why do I say this? Those pairs are gonna give you a nice structure but a little bit slow moving right, to your pace. So you want to focus as a beginner on taking 1-to-1s, 1-to-2s, right? Slow grind, right? In year 2 now, you want to start to level up now because you're getting a feel of the market, you're understanding structure, you're understanding how to read the candlestick and so on. You want to level up now to to make much more money for the same amount of technical effort that you put in all the USB or USB CAD. So now you'll be looking at your GBP JPY, you'll be looking at your USD JPY, those intermediary type of volatility pair, right? You move on to year 3 now. Notice you want to spend a year on each of these pairs. Right?
Okay.
Trading takes time, the same way it takes a doctor like 7 or 8 years, or a lawyer very long time, right? You have to know that trading takes time. Don't rush the process, right? Don't just jump up and look on Instagram and all of that, and through you see those guys doing big and massive, you think like, oh, you want
Understand.
to do the same thing. No. So in the third year now, you want to start to look at a little bit more volatility. You can start to look at your US 30, NAS 100, your gold, right? Stuff that's going to move much more faster. But a lot of the mistake that I see beginners make is that they just come into the game and they want to jump on the fast moving pairs too quickly. No, right? Start from your 1-to-1 and your 1-to-2s on the slow pairs first. You know, build up some capital, right? Then now you move on to the GDP, JPY type of thing. You can look to increase your RRs, right? You can start taking your 1-to-5, your 1-to-7, your 1-to-8, those type of movements, right? Looking at bigger pips, right? Trying to get some 300 pips, 400 pips, those type of movement. But as a beginner, you should just be focusing on trying to catch 20 to 30 pips, right? Just to get a feel of the market. Take your time. Trading takes time. Thirdly, you want to focus on a specific time within those sessions. So for me, London session, I'm only focusing on pre-London, London Open at the time of volume. Once like uh, 45 minutes to an hour pass after London Open, I'm no longer looking for a trade. If there's no trading opportunity, I'm then now looking at pre-New York, New York Open, fetch that same amount of volume, right? So therefore, 2 hours, 2 hours pre-London, London Open, 2 hours pre-New York, New York Open. That's 4 hours out of the day. Other set of hours now, right? Within your trading plan should be focusing on backtesting the strategy, right? And then now when you trade now in your sessions now, you're forward testing. So with forward testing, right, and back testing, you must gather data. Whether it's back testing or forward testing, you must gather data. So with your back testing and you're journalizing and taking snapshots of the chart setups and so on, narrate the setups and so on, and to see how those setups play out from your back testing. Same as forward testing, you're journalizing, narrating your emotion during the trade and so on, your entry points, taking snapshots of the entry setup and so on, right? So both back testing and forward testing needs to be journalized, right? So the step 3 that we're looking at, right? Looking at trading at the correct time and the pre and the open, right? And you're looking to journalize while you're back testing and forward testing with those trading things. It is key, right? You have to gather data, right? So this could be computerized, such as having it with TradeZeller, then printing out the report, or you could do it manually in Excel, like or I used to do it. You get me? Or you can also use my FX book. That's a free software where you can gather data, right? So back testing and forward testing without data is going to put you in a lot of problem. You must have data, Andre, to analyze, what are my best winning trades? What setup are my best? What is my A plus setup? My B plus setup? Those type of stuff. What setups, are C minus that I want to stay away from them. The data is going to show you this, right? The data is going to show you the volatility in each candle at certain time and so on, right? So you must back test and forward test. So you're going to back test in the non-trading hours, and you're going to forward test and gather data in the trading hours. Fourthly, we're talking about risk management. Risk management is key. How much are you going to risk? right? How much you're gonna risk per trade? As a beginner, you should be focusing on risking 1 to 2% per trade, right? But a lot of persons just looking at, oh, no, risking 1 to 2% of the account. That's not where risk management is.
Yeah.
Risk management also involves the amount of pairs that you're trading, right? For me, and I would always suggest trading 1 to 2
Yes,
pairs,
yes.
right? When you start looking at a lot of pairs, you're starting to get confused
Okay.
because the brain can only process
Alright.
so much strong information per day. So you want to focus on 1 to 2 pairs, right? Next, you want to focus on taking 1 to 2 trades per day. Do not over trade. Managing over trading is also
Yeah.
part of risk management, right? Because if you get a nice setup and you make, for argument's
Okay,
sake,
okay.
$1,000 and then start over trading next day, and now you're down $2,000 on that day, you now wipe away that entire $1,000 and now down $1,000. You follow what I'm saying? You must not overtrade. 1 to 2 trades, right? The first one win, walk away, call it a day, right? Leave trade the
Oh,
next day. First one lose, try to take a re-entry, but never ever 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 ever, right? Take a re-entry unless structure has been formed again, right? Did a whole video on this, Andre, so you need to go on my YouTube channel and check it out. Never ever ever take a re-entry unless structure is formed ready again. And speaking about waiting on structure to form again, right? You must know what time frame you're focusing on,
okay.
right? So for my advice, what keep it simplified for me is that I look at 4 hour structure to know where
Yeah.
supply and demand is holding, right? If there's a situated higher low form and demand zone of the H4 level, right? Then I'm looking to buy. Then now I'm going down to the 30-minute time frame to look for support to be formed. Bear strong closure, bullish strong closure, weak on the bottom, and I'm looking to take my entry there. So entry time frames are like 30 minutes, 15 minutes, and 5 minutes. But as a beginner, nice for you to just focus on just H4 on the 30 minutes. So once the H4 structure has been set up, then now you're looking at the 30-minute time frame for those entries or demand or supply level, right? So at supply level, you know, you're looking for yourself, you're looking for bullish candle closure, bearish candle closure, which at the top, right? The distance has been formed, you're looking for continuity, right? All of this movement documented in my GDP JPY analysis series, that playlist on YouTube. You need to check it out, Andre. Check out that playlist, right? I drop ton of gems in it daily, right? So you need to check it out. Very, very vital. Also, when it comes to risk management, a lot of persons just focus on the downside. But in risk management, you also have to focus on your upside, right? Where are you going to exit, right? If you know that you have you're going for a buy and there's some form of supply zone, right? Some H4 supply zone, or there's some form of resistance or something like that, right? Why would you want to take profit beyond, right? You want to get 100 pips based on where you enter, but when you look at it, 90 pips is just below the supply level. So why would you want to set your take profit at 100 pips beyond the supply level above it? You get me? So you have to set your take profits based off structure. So you have to know where you want to exit. You follow me? So risk management also have to do with the upside, knowing where to exit, right? Not leaving profits on the table, right? If you're seeing some form of rejections and so on, some every rejection, take your profits, move on, leave the trade another day. So risk management, you also have to manage the upside as well. So when you start to get more experience now, right? You start to get more experience, you can start focusing on the A plus setups, right? You have capital in the bank and all of that. You don't have to rush the trade every single day. You're taking like 1 trade a week and so on, then you can start risking like 5% per trade. Okay, you're not taking a lot of trades, right, per day. So for me right now, I'm comfortable risking 3% per trade. and I'm not looking to trade every day. I'm only waiting on A plus setups of supply and demand left on the chart. In conclusion, trading is all about data, right? So what you're going to find is that you can't just take one or two trades or something like that to say a system works. Right, Andre? So what you will find is that in order to know if the system works, you have to exercise that system over 3 to 6 months. Then now that's a nice enough sample size to evaluate. Follow me? And the key in that evaluation is that you have to be consistent with your action, right? So you must trade at the same time, trade in the same pair, taking the same setup, being consistent with your actions. Because if you're being random with your actions, right? Sometimes you trade a different pair, you trade all different times, all of that. What you're going to find now is that you're going to get random results in the sample. So you don't want random results in the sample, you want consistent results. And this is how you're going to tell now if your strategy has an edge. Because in trading, you must be. But if you work on a strategy over 3 to 6 months, thereabout, right? And then now when you look at the win rate, you see, oh, you have a nice win rate, 70 to 80% thereabout, right? You're feeling good about yourself that this system really works. But it cannot be tested 1 week, 2 weeks, no. It has to be over a course of 3 or 6 months. Validate that strategy. Alright. And you must do the same thing over and over every single day. You must be disciplined. Risking the same, trading the same time, trading the same pair, trading the same setup. Right? Must be doing this consistently. The moment you start doing different things, you're gonna destroy something. That's my advice to you. I really hope. Yo, Dre, thank you so much for this. I really appreciate love you taking the time out from my business. Sure. And not alone that it helps Andre, but also helps you, the viewer. Until next time, straight balling, no problem. We're out.